Stock market today analysis for Thursday, November 3rd, 2022. Nasdaq down by 1.73%. S&P 500 down by 1.06%. U.S. Treasury 10-year yield up by 10.3 basis points. Gold down by 1.04%. Bitcoin up by 0.20%. And oil down by 2.28%. Earnings still happening around here. And who reported today? PayPal and 489 more. Tomorrow going to be a lighter day of 74 reporting. Going into next week, we've got these different names reporting, and I think a lot of reporting sooner or later it slows down a little bit. It's basically every quarter, right? 4 times a year. And it's really up to you to pay attention to who's reporting, if it affects the way that you're trading or investing, or for just your general market know-how. You can go to stocktwits.com/earnings-calendar for an easy place to see, even though there's other places also. The VIX down a bit. So just as recently as the middle of October, we were over 30, and now we're getting to be about down to 25. We're looking at 1 year on a daily interval. And let's see, where was it? Back here, April of 2020. So now we're over 1 year. But basically, you know, there's the saying, when the VIX is high, you buy. When the VIX is low, you go. Kind of in the middle here, but it's nice to know high in relationship to what? Low in relationship to what? The VIX. What is this? This is a fear meter. Volatility index. So when the VIX is high, there's a lot of fear in the market. When the VIX is low, there's a lot of whatever the opposite of fear is. So when the VIX is high, generally stock prices are low. When the VIX is low, generally stock prices are high. So if the VIX is high, you buy. When the VIX is low, you go. Or, you know, when the VIX is high, sell put options. When the VIX is low, sell call options. The MMRI up again a little bit today. Closed at 288.10. We see we're still here in this high range. We're in the high end of the high range of risk. Low, moderate, high. We're in high. We're at 288. We're in that high end. Bonds. I'm making this video too late for Hawaiian Standard Time, and bonds have wiped that clear, getting ready for the next day. But we see here on this 52-week range, pushing to the high end of the 52-week range. S&P 500 got this doji action going on, a little bit below the 20-day moving average, so we fell down. Maybe we're going to get maybe a bit of a rally to the upside, or possibly more selling to come in. See where there was something similar like that here, more selling came in. Right? Like that, more selling came in. But sometimes you'll notice they go to the upside. Basically, when you see these dojis, it's kind of like digesting. You can think of running or sprinting. At some point, you know, you got to slow down a little bit, get some clarity of what's going on. So momentum could be slowing, but we could see a lot more selling come in. What are the areas we want to look for? Maybe like right in here. Definitely if it's breaking this 550, that's probably a big one there. But it seems like we got a lot of price congestion right in here. So somewhere in here, it starts getting down to this area. You really want to be watching. Technology sector continues to get beat up. Not even a doji. It's fairly wide, not super wide range, but it's definitely not doji, right? We opened here, closed here, and kind of gapped a little bit down, seemingly maybe holding some support right here. If it starts breaking below this, then we got to watch out for this. And this is a lot of what's holding the market up, or what brought the market up in the past, was technology stocks. So they've been coming down. It's bringing the market down. If this is really going to crumble, maybe we'll see other things crumble. Healthcare back below that 200-day moving average, with a big wide trading range of a doji here, right? The wick and the tail, or shadow, whatever you want to call it, of this Japanese candle, it was a wide trading range, and broke below that 200-day moving average. We'll see, is it going to stay below it? If it does, then that's more. If it continues to stay below the 200-day moving average, like it did here, broke above it but couldn't maintain, then this is has been one of the strongest sectors making up the S&P 500. So if this one is not going to stay above that 200-day moving average, then it's really kind of putting some nails in the coffin. Financials, we got this doji going on, right? Rallied up, didn't even make it to the 200-day, but breaking down, still above these moving averages here, but high, lower high, lower high, lower high. Consumer discretionary, big selling off day today. We're right at this bottom of the range there. If it starts breaking that, might be bombs away. Industrials had quite a bit of a bullish candle compared to everything else, even though it traded all the way up here to that 200-day moving average, but some selling pressure really brought that down lower. But this sector doesn't make up a whole lot, maybe around 8% of the S&P 500, so not helping really push things up, just kind of keep things going sideways a little bit. IWM also got this doji stuck between the 50-day and the 20-day, and it looks like IWM is catching some support right above this area. It's almost verbatim like this candle right here, and we see this little cluster got stuck in there. See the top part, bottom part, whatever, that kind of line. It's in this area. Qs, yeah, technology overall is weak. We passed this 255, it's probably going to be making a run to the downside. The dollar popped up today, but pretty weak. I'm not sure what's going on with that color there. Whatever color that is, gray. Look, it's high. Made it to a little bit over 2760 for whatever that is. But right now, if that's an accurate candle, back above all three moving averages, see it bounce down here to that 50-day and seems to have rallied up. But let's see how it closes the week tomorrow. Bonds, yep, we're just traveling down this bottom side of the 20-day moving average. See it bumped up to it and hasn't been able to pass it. Generally speaking, when TLT is heading down like this, the stock market will be heading down also. Oil, all right, right now oil is peaking above that 200-day moving average at 90.42. Seems like it's kind of creating, using this $88 area is a base, whereas before it was kind of like on the bottom side of that 88. So it'd be interesting to see where this candle closes, and if it's able to win this battle with the 200-day moving average. You see here it got above that 200-day but quickly came back below it. but still in this time frame making a low, lower low, lower low in this short amount of time frame. But as far as looking at 3 months, you know, we're here. We've kind of went sideways, up, down to equal sideways. It's kind of in the same place, or pretty darn near, right? There it is. Right, was in this area before, back in that area. After the midterm elections are over, it's going to be interesting when the government stops dipping into the strategic oil reserve and using that strategic oil reserve, using that for strategic elections, I guess. If they're going to stop doing that, then it'll be interesting to see. That could be artificially keeping the market down. Speaking of down, we got a high, lower high, lower high, and GOLD on the 3-month chart. We see overall it's been going down. It's riding down this beneath all 3 moving averages and just riding it down. But it seems to be, hopefully it's going to ride it down further, but it seems to be kind of creating this base in the low 1600 areas, right? It touched 1620 here, but I don't know, somewhere around 1630, 1635, somewhere in there. We see it here, we see it here, we see it here. If we go back 2 years, well, 2 years ago it was up here. So overall, we're definitely down on 2 year, and as I've said in previous videos, I hope it goes down really low. I mean, $300 gold, I would be super stoked with. Bitcoin. All right, Bitcoin, look at this. Bitcoin looks like it's creating a new bottom here, right? So this was the floor we're waiting to see. Is it gonna get above 20,000 and stay above 20,000? And at the moment, it definitely is. You know, this for the Bitcoin bulls, I'd be really excited if I was a Bitcoin bull. And for a Bitcoin bear, I wouldn't be as excited because it's definitely here, lows, higher low. It's still got a ways to go if it's going to get back to the all-time highs. And you know, me personally, what I would do if I lived in a state that felt that myself and other citizens of that state, if I lived in a state that felt that we were adult enough to trade Bitcoin, which just incidentally, I don't. I live in a state that that doesn't feel that I'm a mature enough adult to trade Bitcoin, so they made it illegal. Maybe you live in a state where your state representatives feel that you are responsible enough to make decisions with your own money. If so, if I lived in a state where my state officials felt that I was responsible enough to make decisions with my own money, what I would do is I would be trading Bitcoin. Because when you trade Bitcoin, you can potentially catch these shorts. If you hodl Bitcoin, you don't catch these shorts. You just buy and hold. Now, if you're trading Bitcoin, do you miss out on the upside? No, you don't. You trade it up. You trade it down. And what you could do, if there's some indications while you're trading it up, and next thing you know, you think it's, you know, it's just going up, well, then you can hold on to it, make it a longer trade, stay long longer. Whatever you like. Maybe you live in a state that lets you paper trade Bitcoin. If you do, that would be fantastic to be paper trading. Did we look at this? No, we didn't. All right, so the S&P 500 on this line chart on Yahoo Finance. At the moment, it's looking like this is as close as we were getting to that top part of the channel. And I thought we were going to have more of a test of it. But right now, we really pulled back. Granted, this is on the weekly. Let's see what it looks like. switch it to a daily. All right, you can see it. It's just looking more jagged. All right, we see right here it seemed to have make this peak, and it's not even. You know, maybe someone could say you could draw this line higher up here. Maybe, you know, wherever it's going to be. You know, technically, we know it's not down here, right? That doesn't make sense. So it's somewhere kind of in that area, and man, it's just not. It's not doing it. It's getting away. Although, you know, the other day I was talking about maybe it's going to get out of this channel by grinding sideways. And the reason why I'm saying that is look at how we have this price congestion right in here, right? See how it's like it's not really breaking this low, and we have this little price congestion right in here. Also right here it turned around. Well, look where that's at. Let's see if I can get that right there. Boom. Right? So that point is equal right in here. So it's possible maybe that it'll grind sideways out of here. We'll have to see. But again, you know, if you're not sure, paper trade. That's such a great way to learn paper trading. And also go to ihavesuccess.com, download some free stuff, and start paper trading. Learn how to sell cash secured put options on stocks that you don't mind owning for a while, the rest of your life if you had to. Learn how to do the wheel strategy, and make sure you do that, because I'm getting closer to releasing a product that could potentially help you out with this. You guys have a fantastic day. I'll talk to you later. Bye-bye.